For those who do not know me, my name's Danny Bullock, and I'm a life-centered planner with Dream Builders Financial Services. We are physically located in Rhode Island, but I am location independent. I can talk and service individuals. I have clients in 14 states, believe it or not. And I love helping people. With me this afternoon is a good, I guess you can almost say you're a family friend of mine.
Yeah.
Sort of, right?
Yeah.
Sort of.
Yeah.
He is a brother-in-law to one of my best friends, and we've known each other for a little while now. And I've come to learn about his expertise and what he does well, and thought he would be the ideal candidate to kind of kick off our BOSS series. And our BOSS series stands for Business Owner Success Strategies. And today, we're talking to John Bodeau, and I will give him a second to introduce himself and talk a little bit more about his background. But the reason we wanted to kick this thing off and title it The Pandemic Pivot is I've seen and some of the people I've helped over the last 6 to 8 months, one of the things that we've had to drastically do is abandon our game plan we had for 2020. And if you know anything about sports, I'm a big basketball fan. One of the moves that works well in basketball is the pivot or drop step. And that's when you pivot and you go into another direction. And so we're going to talk a little bit about that today. But John, why don't you give us a little bit more about who you are and just your background? I love your history and things of that nature, and how you came to do what you're doing now.
Sure. Yeah, Danny, it's great to be on the show. And I think back to a lot of great conversations we've had in the past. And so I'm looking forward to another great conversation. But I started my career as a chemist, believe it or not, an analytical chemist, which sounds maybe crazy, but did that for many years. And then had a really good friend who was a real estate agent, and his dad was a real estate investor. And so I've always been pretty entrepreneurial and thought, hey, how can I make more money? How can I start another business? And so got into real estate through a really good friendship with this gentleman who became my mentor. I ended up buying a number of rental properties. By 2004, I had about 30 rental units that allowed me to pivot. You talk about pivoting. I pivoted hard away from chemistry to just starting, managing real estate, and did that for a couple years. Ended up meeting some other friends who we ended up starting a marketing company for real estate agencies. Did that for about a year. Grew that pretty successfully, and then decided, hey, I need to raise some more capital to try to scale this. Ended up selling that first business and then starting a second business. We scaled that from really 0 to 100 employees in 3 years. We were on the Inc. 500 twice. At about 1,600% growth over a 3-year period. I was the COO and CFO of that business. Then we raised some private equity, which was an incredible experience. Got the opportunity to be coached by some former McKinsey consultants who really helped me to understand business and financials and such. And so we continued to grow that and eventually sold it in 2015. And at that point, I started my own consulting business. Actually, I think it was 2014. Started my own consulting business, and I've been doing that ever since. So now 6 years, which is crazy.
Wow.
But really, I have a high degree of respect for small business owners. I know how hard it can be. I know the stress that can come along with owning a small business. And it really takes a special individual to start a business and to grow it and to work at it. And so it's not an easy thing. It's really a very difficult thing to do it well. So I really have a high degree of respect for those folks. And so those are the types of people that I like to help.
Good. What was the experience like being on the Inc. 500 list? I don't think I've ever personally met anyone, any company, anybody from a company who's actually made the list, and you guys did it twice?
Yeah, we did it twice. It's when you say about the experience, it's basically you put you send your financials in, you send, 3-year, year 1 and year 3, and they calculate the growth, and that's determines your spot on the list. And so we just sent it in, said, hey, let's see if we can make the list. And the magazine comes out and you're like, oh, wow, we were 256. I think it was 256, something like that. So there was really no, and it's, it's kind of like a feather in your cap. You could say how quickly we grew.
Well, I think it is a feather in your cap because it's the top 500 businesses,
right,
at that, for that year in the United States. And you guys, were better than that. You were 257, you said. So I know you're downplaying it a little bit because you're a modest guy, but I think it's something that's commendable, and it adds to what you're doing today, the value you bring. It's just not, hypotheses and things of that nature. You actually kind of know what you're talking about. And so, I appreciate
sometimes
your time. Yeah, right. Don't ask our wives.
Right.
So I appreciate your time and things that you're going to offer and you're going to give today in way of just education and knowledge. Just quick housekeeping rule. If you have questions or anything like that, put them in the comment box and we will try to get to them. John, we do have pretty lot that we want to kind of cover today as way of information. And if you have any questions or you want to follow up, I'll give out my information and John's information at the end, and you can follow up with both of us, at the end. And so, let's just, jump right in it. We can't, predict a pandemic. Nobody, predicted what's going on in 2020. What a year. But, how can we be better prepared, I guess, for, something like this and for small business owners and, individuals in themselves who find themselves in the thick of it, where should they start right now? We're November, 6 weeks left, 2020. We still are trying to grow and just survive. Where should those individuals start right now?
Yeah, that's a great question. And it's a great point that you can't predict these types of events from happening. But if I was speaking to a business that was in the thick of it, when you say the thick of it, they're, maybe they're having issues with cash flow. Maybe they're not sure what the future holds for the business. What I would suggest they do a few things. First, I sort of break it up in a couple different buckets. One is short-term and long-term. And I love, 7 Habits of Highly Effective People. And it's got this time management matrix, and it talks about, doing the things that are urgent and important, but the things that are important but aren't urgent. And so I put the short-term bucket as, this is really important. It's very urgent. And I put the long-term bucket as it's really important, but it's not urgent. So the short-term piece, what I would suggest people do is first develop a 13-week cash flow. And so what that is literally in a spreadsheet, you map out week by week how much income you're projecting to generate, what are all the expenses related to your business. And you can actually do this for yourself personally. I do it for myself personally, and it's really helpful. It takes a lot of anxiety out of what's going to happen because you're mapping it out, you're planning it out over the next 13 weeks. What your expenses are, what your income is. And so at the end of that week, you're going to have a net number. So if you got, you're going to generate $5,000 of income this week and you've got $4,000 worth of expenses, you're going to have $1,000 at the end of the first week. And so at the top of the next week, you put that $1,000 that's your starting balance, and you project that balance out over a 13-week period. And you might say, well, John, I don't know what I'm going to have for income, or I don't know what I'm going to have for expenses. Most expenses you're going to know. You're going to know if you got to pay yourself, salaries. Most businesses have a pretty steady expense category. Income, you might say, well, I'm not sure, that's the income bumps up and down, and, I'm not sure what that is. And so what I would suggest you do is guess, put a number in there you think is going to be reasonable. And so each week you're going to put in the actuals from the previous week. So on the Monday of the new week, you'll put in what actually happened. So you change that column into what actually happened. and you're going to push it out another week. So you're going to be continuously projecting a 13-week cash flow. And what's interesting with that is over probably about 2 to 3 weeks, you're going to start seeing patterns. You're going to actually dial in that projection. And so this is really helpful because now 13 weeks out, you might see 6 weeks out, oh shoot, I'm going to run out of cash. Or 10 weeks out, I'm going to run out of cash. If I continue doing things the way that I'm doing things, I'm not going to have any cash left. You can in that cash flow projection, you can also put like any lines of credit you have, any credit card, balances or accesses that you could have to those streams of cash. And so that just takes out a lot of anxiety. This is what's going to happen in the next 10 weeks. If I don't do anything, boom, I'm going to be negative cash flow. So once you've done that, again, it sort of gives you a better picture of the playing field. You talked about sports. This is what's going to happen. If we don't do anything different, we're going to be in trouble at this point. Or, hey, we're good 13 weeks. If you're good 13 weeks, we can go to the long-term piece. If you're not good 13 weeks, then you say, all right, well, what can I do to streamline my operations? What expenses can I take out? Do I really need these expenses? And so you'll begin to streamline. You might have to make some hard decisions, like I might have to let some people go, or I might need to reduce my income a little bit for this business to survive. And so it helps you with black and white information to make a good decision. And also your whole goal here is to give yourself some time, to give yourself a couple months in order to move to point 2, which is the long-term piece.
Okay.
So
with the short-term aspect of it, really assessing the damage from COVID and what's happened, but you're really trying to get organized in a sense of thinking, just trying to get everything organized to be able to process, where the actual holes now may be and how to go about moving forward, right? If I'm hearing you right.
Yeah. In all the businesses I've consulted, and just to give you a sense, the biggest business I consult is probably about a $25 million business. So anywhere from $1 million business up to there. So if you're in the, $50 million business, it's probably not, I don't have a ton of expertise in that area, but in the smaller businesses, of the businesses I've talked to and I start consulting with, I would say basically none have a 13-week cash flow. And the biggest stress on business owners are, I don't know if I have enough cash. Am I going to run out of cash? And so what they do is they look at their bank account and go, oh yeah, all right, I got $20,000 in my bank account. I'm good. Well, not really. Or you could be, or you have no idea because you haven't mapped this out, the spending of the business over time. It's essentially a budget, really, is what it is. But in more detail, my accountant friends of the world would say, John, that's not a budget. And I get that, but it's something that shows you in black and white what's actually happening. And so anytime you're trying to make a decision, like you say, like, what am I going to do next? Like, you really need to have that information in order to know what to do next. So, one of the other things I had talked about or thought about was, if at this point in time, you might want to assess, did something dramatic change in the marketplace, for your product? So one of the examples is if you're a restaurant, well, yeah, something dramatic changed. You can't actually have as many people, inside, inside, and so you have to do something different. Well, if you had the cash flow, you could say, well, all right, got it. I know my cash is going to come down. My income's going to come down 50%. I can map that out. I know I'm going to have to spend some more money for outdoor things. I can map that out. So there's things that you can do, but you need to look at the marketplace. Did something dramatic happen? Is that a permanent thing? How long will that last? And what are the things that I can do differently to actually affect that? And again, those are more long-term things, but you can't really think about long-term things until
you
you've
take care of the short-term
the
issue.
short-term things. It's like, we talk about exercise a lot. It's like, I want to live to, I really want to think about when I'm 80. What am I going to do when I'm 80 or 90? What are the things I can do? And then I don't even think about what I'm eating, whether or not I'm exercising.
Yeah.
I'm not doing any of these short-term things, which are going to affect the long-term. I got to be thinking about the long-term. But if I don't ever do the things in the short term to affect the long term, it's just a gigantic it's a mental waste of energy to do that. And so hand-wringing and thinking, oh man, am I going to survive? Is this business going to survive? But you haven't mapped out what's actually happening right now in detail, so you can make those decisions. You're just going to, freak yourself out and just drive up the anxiety. This is an anxiety reducing exercise.
And we could all use more of that, right?
Oh yeah,
anything to reduce
absolutely
anxiety. So I think it's cool that you mentioned your accountant friends wouldn't, say that what you're doing or mentioning is a budget. They could actually help if you actually do have an accountant or CPA. They could possibly even help with some of the planning in itself, right? You could just, as far as the expenses, they should have an idea on your expenses and things of that nature. And so you could probably, get a report back from them. So you know exactly what you're spending on a weekly basis. And so they could actually help streamline some of it. So maybe all of the data collecting doesn't fall on you. And I think that's one of the things I always strive. I mentioned to my small business clients, you utilize your accountant and your CPA a little more with some of the documents that's needed to help run your business. So looking at
they would love to do.
Oh
yeah, they would love to do that. By the way, I mean, I have a really good friend who runs a CFO for hire service, and one of their common frustrations is, they just, a business owner wants them to parachute in once a year and try to help them figure things out. It doesn't work well.
Yeah.
But what I'm suggesting though, just not to counter what you said, but what I'm suggesting is on Monday, they log into the bank account and they look at what came in and what came out, and they categorize it because, and they do that for at least a few weeks. Now it's going to take them a little while to do that, maybe 15, 20 minutes a day, for that Monday, but they're going to personally see and experience what's going on. Now, if you've got thousands and thousands of transactions, that might not work. And I think accountant would certainly help with them. But I think the clients we're talking about, maybe it's 100 transactions, maybe. But them doing that is going to give them a real picture of what's going on,
Yeah. And cash flow is king. I know you believe that. I believe that. You can have all the great plans in the world, but if your cash flow is limited or the system in getting cash flow into your business is broken, essentially so is your business, right?
Yeah, you're right. It's interesting. You talk about the getting the income in. So as you're looking at that income line, what you might discover is, oh, wow, I've got a customer or customers that owe me thousands of dollars. I see this is a common thing, AR. They owe me thousands and thousands of dollars. And we sort of just become the bank of other companies. Wow. So we become the bank of our customers. And so now, and of course, everybody's struggling with COVID in terms of cash flow. But a lot of businesses, a lot of customers, what they'll do is they'll wait until you contact them till they pay you. It seems crazy,
wow,
but that's what they'll do, because guess what? They're doing the same. If they're doing the right thing, they're doing the same thing. They're figuring out, okay, what expenses can I push off? How can I buy myself some time? And so if you're not aggressive and you're not the person at the top saying, calling them and saying, hey, Danny, you owe me $2,000, man. You're 90 days out. I really need to get paid on that service. And then Danny feels the pressure and he's like, oh, shoot. Okay. All right. I'll put John to the top of the list. And that can dramatically affect your cash flow. So again, I see some business owners are afraid to do that. They don't want to spoil the relationship. But, there's a way to do that that's not doesn't sound like
Well,
an overly aggressive person, but you owe me the money, so you need to pay me the money.
I think one of the things that's worked for me in the past is just listen. This is who we are. You know what we are. We know what we do. We're in business just like
Right.
you. And if you're
Right.
having some kind of issues or something like that, relay them to me so I have a better understanding of your
Right.
situation. And now let's start to work out some kind of plan.
Let's get a plan.
Yeah,
right.
exactly. To kind of get this paid because I want to continue the relationship. I love doing what we do with you, but we both agreed that this was a service, not something I was going to give away for free. And, being that we're all sort of in the same bucket, I think now you would have a better response to that because everybody understands it.
Right.
Everybody understands that, we sort of need each other to kind of keep this thing going.
Right. Yeah. I mean, some metrics around that. If you look at your AR and it's over 90 days is like a month worth of income. That's a tough, you have to get on that. If again, once someone becomes late, you have to jump on that or else it'll string out and it'll be more and more difficult to collect. So that's just one piece of the cash flow puzzle that you'll begin to realize this is what's going on here. And so again, if you've got $50,000 in AR hanging out there, and it costs you $50,000 a month to run your business, there you go. You just bought yourself another month.
Yeah.
If you can get that money collected. Oh, well, I can't collect it all, John. We'll collect 50% of it. Collect some a piece of it. So it's just taking ownership of those things in the business that really, they're not fun. I mean, it's not fun calling someone and ask them to pay you, but it's an essential piece that you have to, you have to sometimes just wrestle the business to the ground. It just doesn't magically, work. You have to really fight for it.
So what's usually a timetable for ARs? What's the most I think you should go? Just maybe rule of thumb.
Yeah, I've seen 90 days. I mean, I think that's too long. But
for small business, I gotta imagine.
Typically, 30 days. I would say I wouldn't let it go past 30 days. But again, you probably have some clients who pay you 60 days like clockwork, and that's fine. And so you have to have a sense and a feel for that. But I think the 90-day mark is it. But again, if you don't let it get past the 30 days and you continue to jump on it, you'll be fine.
And don't be afraid. Have a conversation. We're all in the same storm. Might not be in the same boat, but we surely are in the same storm. So we got the short-term understanding, tracking, starting to get our metrics in order, looking at our cash flow. You said short-term bucket, now long-term bucket. Right. What kind of falls into that long-term bucket?
Sure. So we talked about short-term. We bought ourselves some time. Say you have 2 months now, and that continues to get pushed out, obviously, as you're updating your cash flow. And so now it's time to just stop for a second and say, okay, where can I bring this business from where I'm at right now? And so what I like to think about is a couple different, I guess, anchor points around long-term planning. A lot of people call it strategic planning. And so the first one is to develop sort of a 3-year outlook, a plan. You call it a plan, but 3-year, I just like to call them milestones. So where do you want to take the business over the next 3 to 5 years? I'll say, I usually do 5 years, but let's say 3, because I think what's happening with planning, what's happening with strategy is that the time frame is getting seriously compressed.
Yeah.
It used to be a 10-year. People used to do 10-year plans, and now it's 5-year. And I think the acceleration of change is happening with businesses. And so let's take 3 years. Think out 3 years from now and basically break out that 3 years into everything that's quantitative, anything that you can put a number to, and anything that's qualitative. So how do you want the business to look? And how do you want your employees to behave? So what you're trying to do is, as a business owner, you're trying to create a vision of what you want your business to look like. And vision, people talk about vision, it's a very squishy term. But what I like about the concept of quantitative and quantitative just puts a number on everything. When you put a number on things, it becomes reality. If you've ever managed people, a lot of times people who are managed, or some people that are managed, don't like getting numbers attached to things. Guess why? Because it brings it a level of accountability. Nobody really likes that.
No.
And so, so think about the vision. Painting the clearest and the best picture. If you were painting a picture, you would want, and you want that picture to be clear, you'd want things to be crisp and, you're painting a mountainscape and, you want the mountains to be crisp and the trees and the birds and everything to create a really clear, realistic picture. You'd want clarity around all those things. And so that's what the qualitative and quantitative piece does quantitatively. So what are the quantitative pieces? Revenue. What do you want to be in revenue in 3 years? What is your gross margin going to be in 3 years? How many employees are you going to have? What's your net income going to be like? What are you going to spend? How much are you going to spend on sales and marketing? How much you can spend on operational expenses? All those types of things. Everything you can think of that you could put a number to, you put a number on. And you might say, well, John, that's impossible. How am I going to put a number to something? Well, just do it. Do something. Yeah. Put a number there. It doesn't have to be perfect, but at least it starts painting a picture. So you got the numbers there. And then on the quantitative or qualitative side, how do you want your people to behave? This is where your core values come into place. What behaviors are you looking for out of your people, out of yourself? How do you want to be perceived by your customers? All those types of things that you can't put a number on, but they're quality things that, again, paints a really clear picture of what you want that business to look like. Who do you want to be in business with? You might even think about your partnerships. You might even think about those types of things, that your quality of life. So again, the goal here is to paint a really clear picture, and it might take you some time. I suggest you do it. You walk away from it. You take a week, you go back at it, you walk away, you show your wife, you show your significant other, you show your really close friends. This is what I want this to be, and they'll look at it and give you feedback. And so now, once you've got that clear vision of where you want, the business to be, you can go and start taking a look at the current situation. So now you've painted a picture of where you want the business to be in 3 years. We talked about the short term, but this is now more of an analysis on the short term, which is doing like a SWOT analysis, which is strengths, weaknesses, opportunities, and threats. And it sounds really complicated. It's really not. It's just, what are the strengths of your business, your weaknesses? These are internal things. You have to be honest about yourself. Like, we're really good at this. We're really not good at these things. We have an amazing product. Our customer service is horrendous. We don't have any financial chops within the business. I'm constantly fighting with that. Just being honest about all those different areas. Opportunities and threats are external things. So what businesses, new businesses you could go into, or could you go into? What threats exist that could blow up your business beyond the pandemic piece? So do you have a question, Danny?
Well, no, it's, I'm listening to everything that you're saying, and what's coming to my mind is, it sounds like to some degree, we may want to give our business plan a second look, because some of these things that you're talking about, SWOT, that's in, business plan. You're reevaluating some of the things that, you may have laid out before you started your business. Sure. You're now saying in the long-term piece, part of that is looking at you revisiting your business plan and maybe updating it to where you want to go now, because so many things have changed. It's funny. My business plan for 2020, by middle of April, I had scrapped the whole thing.
Right.
But that's just my business plan, for the year, not for the business overall. And I find it funny and that's why I know some of the things you're talking about are in a business plan, because I covered some of those things this year. But that sounds like what you're essentially suggesting, right?
Yeah, a business plan, and I've done a number, how many business plans I've done. Used to be a part of the business I focused on where I would help people raise capital and create business plans. A business plan is really, like you said, for the start of the business. That's the way I think about it anyway. This process that I'm telling you about is something that you should go through annually, at least at a minimum. You need to revisit this over and over because, to your point, things change within the business.
Yeah.
But the SWOT analysis is, if you can get, like, for example, if you're solo entrepreneur, doing this by yourself is tough. If you've got a small team around you, and so if you're probably like a $2, $3, $4 million business, you're the owner and you have a team around you, and at least you should anyway, developing this team. They should be helping you to come up with this analysis so that you can get a clear picture of your current state, where you're at right now, and what does the playing field look like right now. So it's kind of like, you have to use a sports analogy. Every sports team or football team has a plan for game day. They go out, they've got a plan. This is our game plan. They come in, halftime, they come in, and I've never been in a locker room to hear, but I'm sure that they've blown up those game plans at halftime and said, no, we're going to do this. We're going to put these players out in the field because of what's on the field, we need to adjust. These are the opportunities we have. These are the holes in their defense. This is the threat. This guy's a real big threat here. We got to cover him differently. Again, I'm not a sports guy, but
I am. And we live in New England, and I'm not a Patriots fan by any stretch, but at least the greatest coach of this generation is a master of that, making second half adjustments. So your sports analogy, you're essentially saying, hey, we may need to make some second half adjustments to be able to win this game.
Sure. And there's a concept called sunk costs.
What was that?
There's a concept called sunk costs.
Sunk costs.
Right. And so what I might be using the concept a little bit differently here, but often what happens is you create a plan and I'm sticking to this plan. I've already spent thousands of dollars on this. I've already invested in this. And the best business people are the ones that they blow up. They walk away. They say, this isn't working, and I'm going to walk away. I heard this concept, and there's a guy called Naval. I'm not going to get his name right. I don't even know if his first name's Naval, but I was listening to a podcast, and he was talking about people like, climbing the mountain, right? The top of the mountain is where you want to be. And people get halfway up the mountain, he said, and they're like, they don't want to go back down the mountain to start over again. They just I just want to make some tweaks and so I can keep going up the mountain. And they don't realize that you might have to go back down the mountain. Like you might have to start at the bottom again and go back up top. And that's a difficult thing because people I've invested so much time in this business. I mean, I hate to say this, but it could be, you could go through this analysis, we're cooked. We can't continue this way. It's not going to work. And you have to be honest. And that's especially for an entrepreneur and someone because typically entrepreneurs have, good egos. I don't mean in a bad way. I mean, it's like, I can do this. I can make this work.
Stick-to-itness. Yeah.
I can. Yeah. And that can actually work against you because you're like, I just need to walk away because this isn't going to, I've done that with some of my real estate. I bought real estate and I bought it wrong. And I had to walk away. I had to, walk away from it because, and I mean, I short sailed it, which is not a great thing to do, but I knew that was the right thing for me to do, financially, whack my credit a little bit, but long term, that was the right thing to do.
Yeah, it's almost like pruning to some degree. If you're into botany or anything like that, sometimes you got to cut back a little bit, to be able to allow for better growth.
I'll try to find that podcast, but it was really good. It was on the Tim Ferriss podcast, and he had a guy on there who he's a really popular guy. His name's Naval, but I'll send it to you so maybe we can put it in the show notes. But it was very powerful because I'm like, wow, yeah, that's so true. We might have to say, you know what, this isn't working, and often it's our pride that keeps us stuck there because we're like, man, what, I'm going to look like a failure. I'm going to look like I didn't know what I was doing. All those types of things. And so that you can't let that prevent you from making a good decision.
And sometimes it's not just maybe this is ending this season or this period's ending, but you can start again. You're never starting from scratch. You're starting with, more knowledge. You're starting with more experience. And so now you can go a little further. It's just tough. Nobody predicted the season we're in right now. And so trying to survive and get through it, like you said, may take having some difficult conversations, and that being, ultimately, maybe we're not fit enough to make it through the pandemic in itself.
Right. You might have to make some changes. So that's a SWOT analysis. Doing that analysis is really important. The next analysis I like to do, and this is more, again, short-term, is what I call the FIRES exercise, which is so many business owners are constantly stuck in firefighting mode. It's like, what new hell will await me when I arrive at work today? So it's, and going back to the whole, 7 Habits of Highly Effective People, they talk about, things that are important and urgent. They get sucked into things that are not important and urgent. Right. And so what are those things that you just keep, again, going back to the patterns, kind of like the 13-week cash flow, when you look at what are the patterns of my spending? What are the patterns of the problems that exist in this business right now? What are the things that I just keep happening over and over again? That one person, that one employee who just keeps having a problem is a problem. I just don't have the intestinal fortitude to let them go. Again, what are those things that you just keep hitting the wall on over and over and over again? If you just made a list of those things, and again, having your team involved in this is going to be helpful, because what happens with business owners, they tend to minimize the issues that their teams have, because that's not that big of a deal. In other words, it's almost blinders to those things, which can be frustrating your team and often do frustrate your team. But you want to be listening to them, because right now, you want to keep you want to keep a hold of your best people. The last thing you want to do is let your best people go. Sometimes you have to do that, but so going through that exercise helps you to get to my last point. But if you had a question on that, happy to.
Well, no, I'm thinking that maybe this is a period where we can get healthy in some ways as far as business.
Sure.
As well. You said, getting rid of toxic employees who may be, dragging the business down, and you may have had issues letting them go in the past. Maybe now is the perfect time to be able to do that,
sure.
To get.
And I'm not,
healthier.
Just so you know, I'm not a big advocate of just letting people go.
Absolutely.
I think if you have hired somebody, there's a contract that's there. Not a little contract, but there's a contract of a trust contract that you've hired them, and you're going to continue to help develop them and pay them. And not that I've certainly in my past been perfect at that. We've had to let people go in the past, and it's horrible. It's a horrible experience, and it's not great. But so you need to do whatever you can to hold on to people. But at the same time, you don't want to hold on to someone who is not the right fit for your business. Going back to the vision piece, going back to the core values piece. Most of the issues I see are core values pieces or issues, but also if you haven't set the right expectations for people, that can be another problem. And so they're not doing what you want them to do because you never told them what you want them to do. And so they're trying to figure out based on your body language what you want them to do. And it's just a very frustrating experience. And so managing people is hard. It takes time and effort and energy. But again, figuring out what are those things that just become are continual issues, systemic problems within the business. Figure out what those things are during this exercise.
So you don't become firemen literally every day putting out a fire. So I think that's funny.
Think about how much time and energy and effort and strain that puts on you, that puts on the business when you're continuing to, you keep on solving or trying to, or never solving the same problem over and over and over and over again. Like that's just insanity, as they say.
And what that time could be used for to better the business. You're right. You know, just
that's right.
Good time to fix some problem solving. All right. And your last point?
So the last piece, once you have all this information, now you've got the vision where you're trying to take the business, you've clarified that, you painted the best picture you possibly can. You've attached some quantitative and qualitative anchor points to that. You've done your SWOT analysis. You've looked out at the landscape to see where are the opportunities, where are the threats, where, what strengths can be maximized and weaknesses diminished. What are those issues that we just keep, running into over and over and over again? Now is the time to say, all right, what are we going to specifically do over the next 3 to 6 months? It's goal setting time. What are we going to focus on? And if you just Google balanced scorecard, if you Google that and you look in your business, say you've got a restaurant business balanced scorecard, it's a great framework to use in order to set goals. And the way the balanced scorecard works is it's got 4 perspectives. The first one is financial, then customer, then internal processes, and then learning and growth. And so you can then look at that landscape of all the things you've just, all that data that you just compiled and figure out what do we want to focus on over the next 3 to 6 months? Well, in the financial arena, if you did your 3-year plan, you can see, okay, what would it take to grow to there? So what do we need to do this year to grow to that point that we're going to be in 3 years? And so you can come up with a financial metric, again, trying to pick a number. Now, if you've got a sales team, they should be working with you to develop what that should be, that number could be in a realistic way. But your financial metrics, from a revenue perspective, maybe your gross margin, what you need your gross margin to be, maybe cash on hand, AR. Those are some financial metrics. And so the way the balanced scorecard works is it's a cascading, it's actually a cause and effect relationship. So, we need to have certain amount of organizational capacity, human capital, that's the learning and growth piece, that actually can execute on the internal processes within the business. So every business is just a strung together group of processes. So we need those to work right to satisfy the customer. That's the next perspective. And when we have happy customers who want to pay us and we're delivering value to, that drives the financial piece. And so it's a nice framework. So looking at, again, those different pieces of business. So I just come back to the business, like a food business, restaurant business. So on the learning and growth, maybe there are things that your team needs to learn to do to now run this process of online ordering. Maybe there's that's going to be an opportunity to do more online stuff or online ordering or pickups. So you need to develop a process so that you can actually do that. So that's the process piece. Well, how do you know if your customers are happy? Well, do you have any type of survey tool in place? So every time someone picks up an order, they get an email from you saying, on a scale of 0 to 10, how happy are you? So you know if you're actually delivering value. Plus, you're collecting people's emails, and that could be a whole nother marketing thing altogether.
Absolutely.
But so now you know your customers are happy, and then of course you're collecting data on the revenue side. So that balanced scorecard creates what's called a strategy map. If you look up strategy map, that's another thing that you could look into. But each goal has it's a SMART goal, which means it's a specific, it's measurable, it's attainable, it's realistic, it's timely. It's a SMART goal, and it has a measurement attached to it, so you can determine whether or not you're completing it. And you can create a strategy map that then you can communicate to your team. This is our strategy. The next 3 months, we're going to execute on this online ordering thing. We're going to drive that. We're going to measure the results in terms of customer satisfaction. And this is our goal from a revenue perspective. Everybody's on the same page around what strategy you're going to take. And so,
laser focus. I think if you can come up with the strategy and the whole team, it's communicated clearly what you're trying to achieve and why everybody's fully focused on it. That's powerful.
Oh, it's super powerful. And I've seen it work. It's not just like a theoretical concept. I've seen it work in many, many, many businesses. You might create the strategy and go, oh, shoot, this is the wrong strategy. And this is the sort of the last part, which is once you've created that strategy, you need to have a meeting rhythm. It's typically monthly. And I do this for many customers. We create a strategy map, and then we actually pay me to run their meeting, which is crazy. I think that people would do that, but they do that. And so we go through the goals and we say, all right, well, how are we doing? It drives accountability. It drives, it drives results, right? So there's a whole study on goal setting, and they've proven that goal setting drives performance. It's a scientifically proven fact. So and it's a personality thing. Some personalities don't like setting goals. It makes them feel too hemmed in. No, we're just gonna ride with it, and we'll see how it goes. And it's just, if you want to drive performance, you have to have goals. Period. It's just the way it goes. And so this is a nice framework to use so that you achieve the performance that your business you want it to achieve.
Okay. So how would you suggest they start to prepare? Because regardless of, everybody's in this crisis together, business owners usually have crises they have to deal with on a regular basis. So this can help them get prepared for the next big crisis, whether it's a pandemic or not, correct?
Yeah, absolutely. I mean, back to that 7 Habits of Highly Effective People. When a crisis comes in, you've got to ask yourself, is it really a crisis? Like, is it really, something that's a new event, like a pandemic is a new event, versus something that you've got that one employee whose brain explodes every time something happens? It's like, is that really a crisis, or is it something? There's another concept called, is it a problem to be solved or attention to be managed? Those are two completely different things. If you can kind of separate them in your mind, like the tension between sales and like service or delivery, there's always going to be a tension. Sales wants to sell as much as they can, with as many bells and whistles as possible,
and as little restrictions as possible.
Right, as little restrictions as possible, and service wants to do absolutely the opposite, and so there's always going to be tension there, and so you have to manage that. But so if you have this repeating rhythm of planning, you'll be able to start seeing things coming down the pike, and put it into your planning agenda, if you will. And so you as a leader, of course, you can't wait until, hey, here comes the pandemic in March. Well, we're going to have strategic planning season, in November. We'll wait to deal with it then. Obviously, you can't, you have to be proactive about that thing. But there's nothing stopping you from saying, guys, time out. This is coming down the pike. Let's look at a strategy map again. I think we might want to adjust this. We might want to take this strategy out, put this new strategy in. What do you think? And then you roll with that new strategy. So this just is a nice framework to ensure that you're heading in the right direction. Again, it's going to your vision. You already thought about this is where we're going to, we're going. If we don't make some adjustments, we're not going to get to where we want us to go. So we need to make some adjustments.
All right. So going to try to recap. I think we got about 7 or 8 minutes, and I want to do that and then put up your information. And then we have something we want to kind of give them as well. So recap, looking at business owners or even professionals who find themselves in the thick of it. First thing, short-term goals, want to assess the financial damage from COVID and come up with a 13-week plan to monitor what they have coming in as income and what they have coming out, right?
You got it. 13-week cash flow.
All right, so we're going to do the 13-week cash flow. One of the things I'm going to just say this, interject, dealing with my clients, one of the easiest ways I suggest that they do this, Mint.com is a free software. It's powered by QuickBooks. It's non-transactional. It will collect all the data from your credit cards and your bank accounts. They don't share it with anybody. It's 3 times encrypted, 3 times more than the banks are. So no one can really get to your information. Nobody can make transactions, even if they do. But it collects all of that data and prints out some really sad reports. And John, I say that because I've done it. And you'd be amazed at the stuff you will spend money on and you're not aware of. So short term, looking at that 13-week financials, getting that information in, and then, possibly, getting to a SWOT analysis, strength, weaknesses, and then looking at your opportunities and your threats, right? That being part of the short-term process as well.
Well, that's probably more of the long-term process. I think on the short-term piece, it's looking at that cash flow and looking out. If you do a 13-week cash flow and you look out, hey, in 6 weeks, the goal is you have enough cash for 13 weeks. You get out to 6 weeks and you go, oh, shoot, this is going to go negative. My cash flow is going to go negative. Then looking back at your cash flow and saying, all right, what can I do differently? We talked about AR. We talked about increasing the revenue. Maybe you can sell. You can, run a sales promotion or do something to drive more sales. Certainly collect more cash from your customers that owe you. But then also looking at expense side, what are the things that I really don't need right now? I can push off, that subscription in Netflix, Danny. You know what I mean?
Absolutely.
That'll save you $12 a month. But anyway, so what are the things you can take out that you really don't need right now, so that you can buy yourself some time? You want to buy yourself some time. We didn't talk about this. I know you're going to do this in another podcast, but they used to be, I don't know if they're going to do another PPP loan. But that could have been, if you had the option to do that, you should have done that. So things like that, I actually helped the customer do that. They were running out of cash. We ended up getting a PPP loan, and it was just, it saved the business. So I'd be willing to bet they're probably going to do another round around on that, but don't wait for that. Don't wait for like this mythical thing to come in. Figure out how you can extend your cash flow out 13 weeks.
Yeah, and so then if they do open it up and you get it, it'll just be, a blessing on top of what you've already done. Yeah. And so short term, we're looking just for survival, 13 weeks, looking at survival. In long term, then we go with the SWOT analysis and looking at, I like the balance scorecard and the strategy map, developing the 3-year outlook. I like that. And so that's essentially the long-term goals. Now, so we're moving from, survival to maintaining, and then looking at how we can thrive coming out of this pandemic. And so, I mean, man, you gave a lot of great information. And the great thing about this is this will be recorded. I'm going to put it up on my website and YouTube channel. And so you can go back and revisit this stuff. And we'll also be sending a recording out because like me, I imagine there are some people who take a little bit to digest this. And so got a couple of minutes left, and I want to talk about something that you're going to give. I want you to explain what it is, and you're offering 2 things. One, for anybody who may find themselves in the thick of it and they're having a problem making a decision, you're willing to sit with them, 15-minute phone call.
Yeah.
Help, just
absolutely
get things moving a little bit to help them, get to starting to work out some of their problems, right?
Yeah, absolutely. I mean, I do it quite a bit. One of the things I try to do anytime I do a consultation is to add value. And if I've done that, I feel good, right? And so if you're struggling to make a decision and you need some direction, I'm happy to have a conversation with you free of charge,
Right.
because life's a long time, and you might circle back and ask me for help in the future. So.
And you can, and it's free. Free phone call with the man of your status, I think, is a benefit. Now, I'll put up his contact information in a second, but also a strategic planning agenda. Now, explain what this is and how you feel it'll be helpful.
Yeah, I pulled together sort of this day workshop that I do for a lot of clients, and just pull the agenda together. So if you want to do it on your own, it gives you all the details around all the things we talked about: the SWOT analysis, the FIRES exercise, creating goals, all those types of things. And so it puts it in an agenda format so that you can follow it and try to execute it on your own.
And so we're actually going to send that out with the copy of the video as well to individuals, so you can actually start some of this information, start some of this process on your own, some of the things John was talking about. And I love the fact that you mentioned 7 Habits of a Highly Effective Individual. Right. It's actually one of my favorite books, and it should be on every business owner or entrepreneur's reading list, which I think is beneficial. So looks like we're running out of time. Let me bring up your information so anybody who has any questions or anything like that, guys, give me a thumbs up. You can see my screen. Email there at the bottom is the best way to contact him. In the email, mention that you attended this webinar, and that's what he'll use as a reason to remember who you are, and you can get in contact with John that way. So, John, I want to thank you for your time. Thank you for your information, your knowledge. It's valued. I got so much personally from myself, and I'll be able to not only help myself, but some of my clients who run into this as well. And look forward to what comes out of this. I'm pretty sure you'll get some people wanting to contact you and utilize your skills. So thank you guys for tuning in. Thank you for spending your last hour with us. We hope it were helpful. I'll put up my information here shortly to end. If you have any comments or any questions you want from me, hello@dreambuilder-ri.com is the best way to get in contact with me as well. And if there's nothing else, guys, I'll see you at our next webinar, which will probably be the first week of December. All right. Great. Guys, have a good day, and God bless.
Thank you.
Thank you.